everyone, we'll present the audit of purchase cycle. My name is Anis Fadila binti Amiruddin. My metric number is 264474. So before we move on how to audit the purchase cycle, let's look at the introduction. So in this chapter, roughly we are going to learn on how to perform an audit on the purchase cycle. It involves audit of classes of purchase transactions, cash payments, and also balance of accounts payable. The reason why it involves cash and accounts payable is because the purchase may be the cash purchase or the credit purchase. So there are two products of purchase cycle, which is the transactions and accounts. For example, if the company purchases some goods, it must involve transactions, whether it is debit or credit. And it also involves accounts such as cash accounts, purchase accounts, and also accounts payable. The purchase transactions involved in the purchase cycle is first one is the requisition of goods and services. Next, the purchase department of the client's company will place the purchase order to the supplier. After that, they will receive goods and services from the supplier. And lastly, it will involve all the recording bills and payments to the accounts payable. So in this chapter, we're also going to learn what are the audit procedures that auditors may perform in order to detect any material misstatements in the purchase cycle. Some of the audit procedures are tests of controls and also substantive tests. Now, after we touch the introduction of this chapter, we will move on to the audit objective of this purchase cycle. The main concern of auditing the purchase cycle is to obtain sufficient audit evidence for all the transactions and balances in the purchase cycle of the clients. There are two key issues during auditing the purchases and payable. The first issue, the auditors need to make sure that all the payables are recorded and not understated. And the second issue is the auditors need to make sure that all the payables resulted from the credit purchases are recorded. ISA 315 already highlighted to the auditors on how to assess the risk of material misstatements through understanding the business environment. So in ISA 315, the general audit objective have been classified into three categories, which is transaction objective, balances objective, and the presentation and disclosure objective. The first objective is the transaction objective. It has 5 audit objectives in this category. The first one is the occurrence. The auditors need to make sure that all the transactions recorded in the financial statement are exist. Next, for the completeness, the auditors need to make sure that all the transactions that all the transactions that need to be recorded are fully recorded. Next, for the accuracy, all the amounts of transactions are fully recorded in the full amount without any errors. For the cut-off, the auditors need to make sure that all the recorded transactions are within the correct reporting period. And lastly, the classification highlighted that all the transactions should be recorded into the correct accounts in the general ledger. Next, we move on to the balance objective. It has 4 objectives in this category. First one is existence. The auditors need to make sure that all account balances for assets, liabilities, and equity are all exist. Next, for the rights and obligation, it tells that the entity has the rights on its asset and obligation towards its liability. Next, for the completeness, the auditor must make sure that all the client's assets, liabilities, and equities are fully reported in the financial statement. And lastly, for the valuation and allocation, needs to make sure that all assets, liabilities, and equities balances are recorded at the right value with proper valuation and allocated in the correct account. Lastly, for the presentation and disclosure objective, there are 6 objectives in this category. The first one is occurrence. The auditors need to make sure that all the disclosed transactions in the financial statements are actually exist. Next one is the rights and obligation. It means that all the disclosed rights and obligations are actually related to the company. For the completeness of the transactions that should be disclosed are fully disclosed. Next, for the classification and understandability, all the information included in the financial statement has been appropriately presented and can clearly understandable. For the last one is accuracy. Accuracy means that all the information disclosed in the financial statement in correct amounts that reflect the proper value. And lastly, for the valuation. It means that all the information disclosed are in their proper valuation. Now let's move on to the nature of purchases and accounts payable. So before the auditors can audit the purchase cycle, first they must understand the purchase, the payments and purchase transaction in their client's company. Usually, there are several accounts related to the purchase cycle, such as purchase accounts, cash payments, accounts payable, purchase returns, and lastly, purchase discounts. For the processes in the purchase cycle, usually it has 5 processes. The first process is the departments in the company will send the request to purchase some goods or services to the purchase department. They will fill in the requisition form. Next, the purchase department will fill in the purchase order form and send it to the supplier. After the supplier receives the form, then the purchase will be processed and the company will receive the goods and services that have been ordered. The purchased goods may come along with delivery notes or purchase invoice. Next, all the recording processes will happen. The document that may use in this process are journals, accounts, and also statements. And lastly, after the company records all the purchase of goods and services, they will make the payment. Usually, the documents involved in making the payment is the payment voucher. In every 5 processes that have been mentioned just now, the company needs to implement controls in every stages in order to mitigate or to reduce any fraud or misstatement from occurring. Auditors also should assess the effectiveness of the controls taken by the company. The controls assessment is performed in the test of controls after considering the risk assessment in the client's purchase cycle. After that, auditors also must design an appropriate audit approach at both financial statement level and also assertion level. At the financial statement level, the risk of material misstatement in this level is actually pervasive and therefore address all assertions. Pervasive means that any misstatement in one area will also affect the other area in the financial statement. For the assertion level, the risk of material misstatement in this level relates to the individual account balances at only one point of time and presentation and disclosure in the financial statements. For example, it will only occur in the period end of the fiscal period of the financial statement, unlike the financial statement level.
Thank you, Anis. Next, I'm Huda binti Ahmad Zuhairi, metric number 261041, will be explaining the accounting system and control activities in purchase transactions. It is crucial to implement an adequate control in purchase and payable because they will affect the whole business. The documentary evidence should be prepared thoroughly by an authorized entity to ensure and validate its occurrence. Each function need to be ensured that they are placed in control, especially their segregation of duties, and independent check should be performed in each function. There are 5 main functions in the purchase and payable transaction. The first one is purchase requisition. The second one is preparing purchase orders. The third one is receiving and storing goods for inventories. The fourth one, approving the supplier's invoice. And lastly, recording the purchase and liabilities that occur in the purchasing transaction. They need to ensure that each documentary evidence in each function should be prepared thoroughly by an authorized entity. Internal verification of relevant documents are needed to ensure and validate the occurrence of the transactions. First transaction trail of documentary evidence would be purchase requisition. Usually, an authorized employee in a department of an entity will prepare the documents to request for goods or services that needed to be purchased from the supplier. Usually, the warehouse supervisor or storekeeper will prepare the documents. The authenticity of the request need to be checked to ensure that there are no fictitious or fabricated transactions created. It is for them to ensure that the occurrence of the transaction are there to meet the objective of audit, which is occurrence. To ensure its occurrence of the transaction, they need to check the inventory first before putting orders. They need to examine a proper approval of the document by the authorized entity for them before they putting the orders to the supplier. A pre-numbered purchase requisition form is a form of control to ensure that the goods requested are appropriately ordered and received by the purchase department. Details that should be included in the purchase requisition form would be the supplier's description, the description of the goods, quantity that they wanted to order, prices of the goods, and item codes. Usually when they wanted to select the supplier, they will usually pick the supplier from a list of approved supplier. They may involve some negotiation in order for them to determine the right price for them to purchase the goods. Price list together with the term of payment provided by the supplier should be approved first before placing the order. The second function in purchasing transaction would be preparing purchase orders. Purchase department will be in charge to prepare the purchase orders. The preparation of this document was entrusted to an independent department apart from the warehouse. The warehouse will prepare the purchase requisition form and they will transfer the document to the purchase department. So the purchase department will take in charge to prepare the purchase orders. This procedure occur because they want to prevent any fraudulent when requisitioning the goods for their own personal use. Purchase order shall be clear, concise and complete to prevent any unnecessary misunderstanding during the correspondence with suppliers. Purchase orders usually used by the auditor as an audit evidence on the occurrence of purchase transactions. An independent review is performed by the purchasing officer to ensure that the goods that have been ordered are received and recorded to ensure the completeness of the purchase transactions. They also will be pre-numbered and accounted for to ensure the completeness of the purchase transaction. Details that should be included in the purchase order are quite similar to the purchase requisition form, which is the supplier's description, the description of the goods, quantity of the goods, price of the goods, item codes, and delivery mode. The details that should be included in the documentary evidence are actually to prove the accuracy of the purchase transaction. They would need an internal verification for the amounts that have been calculated by the suppliers, whether they are true or not. The third function would be receiving and storing goods for inventory. After purchase orders have been approved between the suppliers and the purchasing department, they will be sent to the storekeeper for them to check the validity of the goods received. The storekeeper may check on the description of the goods, the conditions of the good, and also the quantity that they have ordered using the approved purchase order. After that, they shall prepare a goods received note for them to trace the goods tally with the purchase orders that have been approved. A sequence number of pre-numbered goods received note is to indicate the completeness of the purchase transactions. GRN will serve as an important audit evidence for the occurrence of the purchase transaction. GRN usually are prepared after the goods was received by the storekeeper. So, it indicates the occurrence of the purchase transactions. An accounting personnel will perform an independent check on the sequence number of pre-numbered GRN to ensure the completeness of the purchase transaction. They will then refer the GRN according to the invoice that have been sent by the supplier to the accounting department. As for the storekeeper, they will store the goods in the warehouse away from the unauthorized entity, and also for the damaged goods that have been sent by the supplier will be returned back. The details that should be included in the GRN are quite similar to the other two documentary evidence. They are the supplier's description, the descriptions of the good, quantity that have been ordered, price of the goods, item codes, and also the delivery mode. These details are being included in the form to ensure the accuracy of the purchase transaction. On the approved price and also approved quantity that have been ordered shall be tallied on the goods that have been received. And also the GRN shall be accounted to the accounting personnel as soon as the goods received to meet the objective of the audit, which is cut off. That's all from me. Now I shall pass the presentation to my group.
Assalamualaikum and hi. My name is Nurul Farzana binti Azmi 264754. I would like to present another 3 subtopic under 10.3, which is accounting system and control activities. So we move to 10.3.4. It is about approving supplier invoice. Invoice approval is the process of review and approve a supplier invoice before the payment can be made. Basically, a supplier invoice is a document sent by supplier to the accounting department. Companies and organizations usually have internal rule for who is authorized to approve a certain type of cost up to certain limit. Most of the companies or organizations have its own department called accounts payable department that is responsible to take care of the approving process. So basically, we as an auditor should know what the control that can be done by the company to make sure there is no misstatement or fraudulent happen during the process. Here are the controls over approving a supplier invoice. The first one, all supplier invoices are recorded by providing a serial number for all invoices that the company have received. So basically, for every controls have its own audit objective. For the first control, the audit objective is completeness. Second one, all suppliers that relate to a valid purchase transaction need to be checked, and the invoice need to be matched against the GDR, which is GDN, goods received note and purchase order. So here's the audit objective is occurrence. Next one, all supplier invoice amounts are accurately calculated at an agreed price. Here's the audit objective of cost and accuracy. Next one, all suppliers invoice need to be correctly recorded to appropriate accounts and classify if the invoice are expenses or assets by providing a code to each of the invoice that the company have been received. So here's the audit objective is accuracy and classification. Next one, payment need to be made to a valid supplier. The supplier invoice need to be approved before the invoice can be paid to the supplier and can be recorded. The audit objective here is occurrence. And the last one, make sure that there is no delay of payment or unpaid supplier invoice by preparing a pre-list of suppliers approved for payment. So here the audit objective is occurrence, accuracy, and the completeness. So that's the controls over approving suppliers invoice. Now we move to 10.3.5. It is about recording purchase and liabilities. The proper recognition of the liability for the receipt of goods and services require a prompt and accurate recording. Why require a prompt and accurate recording because it is one of the initial recording that affects the financial statements of the company and the actual cash disbursement. So during records, the purchase and liability controls are also needed in this process to make sure that all the transactions are recorded. The audit objective here is completeness, and we need to make sure that there is no unrecorded liability. The audit objective here is occurrence. And also, we need to make sure that the purchase amount are recorded accurately in the proper period, which is the audit objective here is accuracy and cut-off. So basically, these are the 4 steps on recording sales. The first one, the supplier invoice are entered in a purchase journal in a numerical sequence to avoid any of missing invoice that we have been received. Second, the supplier journal is posted to the accounts payable subsidiary ledger, and the general ledger and the accounts payable balance are periodically compared to make sure the agreement in both of these balance. Then we proceed with the purchase journal are posted to the general ledger, and lastly, a monthly supplier statement is reconciled against the accounts payable balance. So if there is any difference on balance recorded by the company and recorded by the customer, we can be rectified immediately, so we can notice if there is any of the difference. Since there are different in nature of business of the company and system used by the company, the process of recording may be varied. So basically, the 4 steps that we have learned before is for manually record. So in our era right now, most of the companies, most of the organizations are using a computerized system, which are all the purchase requisitions, purchase orders, stock availability checks can be performed using a computerized system. Goods received notes are even generated automatically by the system. Even a company using a computerized system, it also need to be controlled. The general control procedure and application control procedure need to be placed in the computerized system to make sure that the system is properly process the purchase transactions. Now, we move to 10.3.6 about payment transactions. In these transactions, it is the process of cash payments paid for purchase and payables that involve 2 important matters, which is paying the liability and recording the purchase. Now let's take a look on the first one, paying the liability. After the amount have been approved and the company have paid to the supplier, it will need to be updates in the accounts payable record to reduce the amounts of the payable. So here, a company need to prepare a list of payable balance due for payment periodically to provide to the payment department regarding on the current status of accounts payable and to ensure the prompt payment is made to the supplier. So even in these transactions, even in this process, it needs a control. Now, let's take a look on the controls over payment. The first one, the company needs to do a segregation of duties between a personnel who has the authority to sign the checks and the personnel who initiates or process the purchase transactions. It is because if there is any misstatement, if there is any problems occur, the company will know who is responsible for this misstatement. So the audit objective here is occurrence. Next, the check signer should ensure that the payments document are supported by valid and approved supplier's invoice and the amounts are correctly stated, and make sure that the details of suppliers such as name and address are matched against the supplier invoice that the company received. And here, the audit objective is occurrence and accuracy. Third one, indication of payment should be made to the supplier's invoice once the payment is made to avoid resubmissions for duplicate payments. And the audit objective here is occurrence. Fourth, the custody and mailing of checks should be under the responsibility of the check signer to prevent theft or alterations on the amounts. And also the audit objective here is occurrence. Next, check should be prepared under the supplier's name and not payable to the bearer or cash to prevent any of the checks from being cashed by the unauthorized person. And also the audit objective here is occurrence. The second last, pre-numbered check should be issued to avoid incomplete or missing checks, and only one or two authorized personnel can access to the blank checks and electronic signature to reduce and prevent the theft. And both of these controls are also occurrence in audit objective. And this is for paying the liability. How about on recording the payments? Recording the payments is an important process to make sure the completeness of the record after we have paying the liability. So the payment transactions will be updated in the payment journal, general ledger, and also master file once the check have been issued to the supplier. Even in this process, we need two controls that to be established by the company. So let's take a look on the controls. Two of the controls are, the first one, the amount recorded in the payment journals is compared with the check summary to determine if there are any discrepancies. And the second one, bank reconciliation is prepared to make sure that all payments are properly taken up to the accounts, because there is a situation where the company have paid to the suppliers but it is not credited from the company's bank account. Therefore, the reconciliation here it is important. So that's all from me under topic 10.3.5. We proceed with another members. Thank you.
Hi, my name is Alia Aimi binti Nasaruddin. My metric number is 264476. I will be presenting for subtopic 10.4, developing the audit plan for the purchase cycle. ISA 300 states that the auditor shall establish an overall audit strategy that sets the scope, timing, and direction of the audit, which will then be used to guide the development of the audit plan. The audit plan developed shall include a description of the nature, timing, and extent of planned risk assessment procedures, the nature, timing, and extent of planned further audit procedures at the accession level, and also other planned audit procedures that are required to be carried out by the standard. Technically, auditors use 5 types of tests to determine whether financial statements are fairly stated. These tests are as follows. Risk assessment procedure. This procedure assesses the risk of material misstatement. This is essential for auditors to determine the types of risk involved and how this risk can affect the magnitude and likelihood of potential misstatement, high or low. This will indicate the amount of audit work expected of the auditor. Auditors use their professional judgment to determine which risks are significant, how likely are they to occur, and will they require special audit consideration. Next is test of controls. This test is performed to obtain sufficient evidence to support auditors' assessment of the client's control risk. It may be performed on either manual or automated type of controls and shall include the following types of evidence, such as inquiries made on appropriate client personnel, examination of documents, record and reports, observation on control-related activities, and re-performance on client procedures. This test can also be used to determine if controls are effective and may also involve testing a sample of transactions. Additional evidence is required depending on the extent of evidence obtained by the auditor in gaining the understanding of client's internal control system and the planned reduction in control risk. Next is substantive test of transaction. This test is used if auditors were interested to test for ringgit misstatements that may directly affect the correctness of financial statement balances. It is used to determine whether all transaction-related audit objectives have been satisfied for each class of transaction. If all transactions were correctly recorded in the journals and correctly posted, then auditors can be confident that general ledger totals are correct. The next one is analytical procedures. This type of test may also be performed to audit an account balance. The most important purpose of performing this test is to indicate possible misstatements in the financial statements and to provide auditors with substantive evidence. The last one is the test of details of balances. This types of test focuses on the ending general ledger balances for both balance sheet and income statement accounts. It is essential because evidence is obtained from a source independent of the client, thus can be considered to be highly reliable. The audit program for most audit is designed in three additional parts: test of controls and substantive transaction, analytical procedures, and also test of details of balances. In addition to the professional liability risk management consideration that can be gleaned from the profession standards, two additional suggestions should be kept in mind. First, investor time. Proper planning is an investment in time that is intended to pay dividends in later phases of the engagement. Identifying a potential issue or complex audit area at the start of the planning process could save time later in the audit. If planning can alleviate even a portion of the demand for time during the busiest period of the year, exponential gain in efficiency and reduction of professional liability risk can be realized. The next one is be flexible. Planning is a guide for work to be performed, not a step-by-step instruction manual. Flexibility creates a positive tone that can be implemented in planning and carried through the issuance. The audit plan and strategy developed at the start of the engagement should be updated and adjusted based upon information gathered throughout the engagement. Flexibility also allows the audit plan to be quickly modified when unexpected risks arise, this reducing professional liability exposure that would exist if adjustments were not made. The process of developing the audit plan for purchases and payables involves performing risk assessment procedures by obtaining an understanding of the entity and its internal control over purchases and people. Based on the information obtained, the risk of material misstatement is assessed and further audit procedures are designed. These are the flow. Okay, so we go for the 10.4.1. Understanding the entity to identify inherent risk. It is very important to understand the entity and its environment because it helps to determine the potential misstatement in the financial reports. Regarding the purchase and payables in our cycle, the auditor should understand the nature of the entity's business in terms of the types of the company's products or services, because cost of sales and gross margins can be determined by understanding the products. Next one is the nature of expenses. Level of purchases and payables can be estimated by understanding the client's business and the average payment period of the industry. By understanding the entity and its environment, it can help to assess inherent risks relating to assertion for purchases and payables. What is inherent risk? Inherent risk is a risk posed by error or omissions in a financial statement due to a factor other than a failure in controls. Okay. So a number of potential inherent risks are derived from motivations of management to inaccurate report expenses, such as pressure to achieve the targeted profits may lead the client to understate their expenses. Okay, next one is pressure to report a higher level of working capital may lead the client to understate their payables. Next one is high volume of transaction that will affect all assertions. Auditors can handle the understatement issue by using confirmations. Confirmation also address existence. To confirm existence, auditors send confirmation to prior years vendors the company is no longer using and to new longers they started using after the beginning of the year. Auditors address classification problems by reviewing the accounts payable, subsidiary ledger, and tracing transaction to general ledger to make sure the transactions go to the correct account. In the event that a fraud risk is identified, the auditor should make sure that controls over purchases and payables are established and implemented adequately and effectively. The design of the audit plan should reflect its responses to risk of fraud, such as performing further audit procedures to address the risk of fraud. Okay, so we go for 10.4.2, obtaining an understanding of internal controls over purchases and payables. Inquiries related to purchases and payables can be reduced by establishing appropriate and effective internal controls. Thus, an auditor should understand the controls over purchases and payables by preparing a written description or a flowchart. The next one is completing internal control questionnaires and also determine if the internal controls are implemented appropriately and effectively. Okay, for an example, the implementation of segregation of function between invoice verification and approval and function of cash disbursement can be observed by the auditor to obtain an understanding of the internal controls. Auditors may observe, make inquiries seeking further details from management, review documents such as purchase documents to determine whether the sequence of pre-numbered documents are appropriately recorded, and also monthly reconciliation between detailed records of accounts payable to the general ledger control account is performed to prevent any unreconciled balances. Okay, the next one is the third one is assessing risk of material misstatement based on information obtained from an understanding of the entity. Inherent risk and internal controls, the auditor assesses the risk of material misstatements. Okay, for example, the auditor may determine whether the purchases are susceptible to risk of understatement due to pressures to report high profits, assess if controls over purchase cut-offs are effective to ensure that purchases and payables are recorded in its proper period. Also, once the risk of material misstatement are determined, the auditor should design for the audit procedure appropriate. Okay. Generally, the purchasing process is not difficult to audit and does not present contentious accounting issues. However, the auditor's experience in past audit must be considered when assessing inherent risk to see what types of misstatements existed. A big issue with purchases is completeness, which is the understatement of account payable. If understatements existed, or if any other aspect of purchasing was problematic, the auditor shall hone in on this issue during the current audit. Okay, the last step in audit planning is designing further audit procedures. There are two steps in designing further audit procedures, which are test of controls and also substantive procedures. Okay. The auditor should evaluate the amount of further tests that should be performed because the amount of procedures performed are based on the assessed risk level. For example, the auditor should include tests of controls in the event that the auditor believes that there are internal controls in place for maintaining records of purchases and payables, but the auditor has not obtained sufficient evidence to determine as to whether the internal control system are functioning effectively to mitigate the risk of material misstatements in the purchases and payable records. Further, in the event that auditors believe that control risks are high, a higher level of substantive procedures should be performed to obtain the required audit evidence. Auditors should address any significant risk of misstatement by evaluating the design of related controls To determine whether they are implemented effectively, auditors neither rely on evidence obtained in prior periods nor analytical procedure to address any significant risk of misstatement in purchases and payables records. If the result of the test of control support the achieved level of control risk, the auditor conducts substantive procedures at the plant level. If the result do not support the achieved level of control risk, the auditor reduces the detection risk, which will increase substantive procedures. Thank you. That is all from me.
Hi, my name is Nur Azariza and my metric number is 261199. Okay, I will continue with the next subtopic, which is performing further audit procedure. Under this subtopic, we will explain the test of control and substantive procedure for purchases and payable. Okay, when should auditor perform test of control? Auditor should perform test of control before they perform the substantive test. However, if there is a case where the controls over the purchases and payable are not well implemented or ineffective, the substantive procedure should be done after the auditor obtain an understanding of the internal controls. In addition, certain tests of control procedure are performed during the understanding of internal controls. Okay, we move to the first one, which is test of control. It is the audit procedure that the auditor perform in order to evaluate whether the internal controls of the client work effectively in preventing or detecting risk of material misstatement at the assertion level. Next, the auditor perform test of control to obtain sufficient evidence to determine whether the controls over purchases and payable function effectively. The assessment for test of control involves two tests, which are tests for design effectiveness and tests for operating effectiveness. Okay, one auditor should test for design effectiveness. The auditor should test the design effectiveness of the controls to determine whether the controls of the company can operate as prescribed by the responsible person, can satisfy the control objective, and can effectively prevent or detect error or fraud that may lead to material misstatement. Auditor use their understanding of the information system and internal control system specific to the client to determine the essential controls over purchases and payables. But first, before that, auditor need to understand the function within the purchase cycle in order to determine the necessary controls and potential misstatement. The table summarizes some of the function, necessary controls, and potential misstatement. As you can see here, this is the function, potential misstatement, and control procedure. The first function is requisition of goods and services. The potential misstatement is there is a request are made for unauthorized purposes, and the control procedure is requisition are checked prior to approval of the goods or services requested. The next function is preparing purchase order. The potential misstatement is purchases are made for unauthorized purposes. The control procedure are each purchase requisition should be approved. The next function is receiving and storing goods. The potential misstatement is unordered goods are received, the quantity and goods received are not in agreement with the purchase order, and the damaged goods are received. The control procedure is all goods issued are checked against approved purchase order in terms of quantity and types of goods by independent personnel, and pre-numbered GRN are prepared for each good received. Okay, what is GRN? GRN is a good receipt note. It was created to record the delivery of item to supplier. The next function is payment of cash purchases and payable. The potential misstatement is check issue for unauthorized purchases, double payment for a supplier invoices, and check are altered after being signed. The control procedure are all supporting document for the payment are reviewed before checks are signed. All paid supplier invoices should be stamped paid, and check should be mailed by the check signer. Okay, next is the second test is test for operating effectiveness. The reason why auditor perform tests of operating effectiveness is to determine whether the control is operating as designed and whether the person performing the control possesses the necessary authority and competent to perform the control effectively. Next, the testing of operating effectiveness of controls over purchases and payables involve a variety of procedures. For example, auditor may perform observation, re-performance, and document inspection, such as watching and tracing. Auditor should carefully draw conclusions because tests of controls are only concerned about the number of misstatements, not the size. The size of misstatements are assessed using substantive tests in which the misstatements are considered to be significant when there are material. For example, when the auditor detected that there is a misstatement in purchase transaction, they may conclude that the controls over purchases are not effective. Tests for operating effectiveness are performed to obtain sufficient evidence about each assertion, such as the existence, occurrence, completeness, accuracy, cut-off, and classification of purchases and payable transaction and balance. In addition, controls over a computer information system are tested using computer-assisted audit technique or known as CAAT. Okay, what is CAAT? CAT is a tool that was used to facilitate to make search from the irregularities from the given data. With the help of these tools, the Internet Accounting Department of any firm will be able to provide more analytical results. Okay, the auditing standard has described two categories of controls for a computer information system, which is general controls and application controls. Okay, what is the difference between general controls and application controls? General controls apply to the whole aspect of the computer information system, while application controls are only applied to processing purchases and payable transactions. Means that the general control is the big one, and under the general control there will be many application controls. Next, general controls relates to the overall processing environment, while application controls do not affect all information system function because they use separate information system software. Next, application control was evaluated using one of the three approaches available, which is test of data approach, parallel simulation, and embedded audit module approach. Application controls only effective if the general control are effective. Why? Because like I said before, the general control is the big one. So, if only the general control effective, the application will be effective. Finally, a final assessment should be made by the auditor on the evidence obtained after performing the task of control over purchases and payable. Assessment on the level of control risk should be determined and documented because they become a basis for decision to plan the level of substantive procedure that going to perform next. When the level of control risk is high, the amount of substantive procedure that should be performed is high.
Assalamualaikum. My name is Amira Fauza binti Amran, metric number 261035. Today I will explain about the substantive procedures. Substantive procedures is prepared based on a preliminary assessment of control risk. The activities carried out by the auditors to identify material misstatement or fraud at the assertion level can be defined as the substantive procedures. The nature, timing or extent of the substantive procedures will be conducted based on the result of test of control and the level of detection risk. How detailed the substantive procedures will be determined by the professional judgment used by the auditors. It is recommendable for auditor to set a moderate level of detection risk in achieving the required audit risk when the inherent risks for purchase and payable transactions are high and its control risks are low. This procedure is to ensure the existence and occurrence of purchase transactions are influenced by the level of detection risk. Detection risk is the risk where the auditor will not detect a misstatement that exists in an assertion
that could be material either individually or aggregated with other misstatements. Meanwhile, inherent risk is the risk posed by an error or omission in a financial statement due to a factor other than failure of internal control. Next, designing the substantive procedures. Auditors should be more aware and careful in obtaining the evidence to determine the completeness of purchase and payable records. Moreover, the auditor should be more thoughtful in planning the substantive procedures that is most effective and should be implemented when the planned level of detection risk is low. By doing that, it can help to minimize the detection risk when the possibility of material misstatement remaining undetected in individual assertion is low. There are three types of substantive procedures. The first one is analytical procedures. The second is test of details of transaction. The third is test of details of balance. I will explain this in more detail in the later slide. Okay, before performing the procedures, auditors need to conduct an initial procedure, such as tracing the opening balance of the current period to the audited balance of the previous year's working paper. And auditor also should reconcile the payable balance from client and ledger. They also should review the unusual entries, and they also should perform recalculation and compare the listing of all account payables. Recalculation is when auditors should add the listing and compare the total with the amount in the ledger. The first type of substantive procedures, which is analytical procedures. It consists of evaluation of financial information through analysis of plausible relationships among both financial and non-financial data. It is planned to confirm expectations and perform in 4 stages. The first one is to review the understanding of the entity as to whether there are any changes to the payable balances are to be expected. The second one is to determine the fluctuations in amount of purchase and payables between this year and previous years. The third one is to determine the ratios and trends for gross profit margin and the average payment period. Any unusual changes in the gross profit margin compared to the previous year's figures signifies the possibility of misstatement in recording purchase. The last one is to analyze expense account by reviewing the ratios between each category of purchases with the total sales and compare with the previous year's ratios. This is to determine the level of activity for the current year to ensure the completeness of the purchase record. The second type of substantive procedures, which is the test of details of transaction. It is used to verify the test of details of balance and usually performed during interim audit and in the form of dual-purpose tests. It comprises of document inspections, which are vouching and tracing. Vouching is when auditors vouch recorded purchase transactions to supporting documents such as purchase order, GRN, and supplier's invoice to verify the accuracy of the transaction. Meanwhile, tracing, auditor trace from purchase order, GRN, supplier's invoice to purchase journal and account payable to verify the completeness of transaction. This is the example of substantive procedures for purchase transactions. Okay, first is to verify the occurrence of transactions. The substantive procedures is the choose samples from purchase journal entries to purchase requisitions, purchase orders, suppliers invoice, and goods received note. Meanwhile, for completeness, trace good received note, suppliers invoice to entries in purchase journal and account payable ledger. And for accuracy, vouch details of a supplier's invoice to related purchase requisitions, purchase orders, and good received note, and trace supplier's invoice to recorded purchase. Continue from the substantive procedures for purchase transactions. Okay, for cut-off, the substantive procedures compare dates of recorded purchase transactions with dates on good received notes. And for classification, we examine the supporting documents for purchase transactions and evaluate whether the transactions are properly classified. Moving on to the next substantive procedures for payment transaction. First, to verify the occurrence of transaction, the substantive procedures will be traced from cash payment journal to bank statement. For completeness, the substantive procedures will be traced goods received notes or suppliers invoice to entries in purchase journal and accounts payable ledger. For accuracy, trace from cash payment journal to suppliers invoice and to bank statement. And for timing, compare dates of check stubs listing and related entries in cash payment journal. And lastly, for classification, examine the documents supporting cash payments for proper classification. Last but not least, the last type of substantive procedures, which is test of details of balance. It is the process of review the obtaining of evidence for accounts payable balance. The debit or credit of transaction does not really matter, but the balance at the end of the period is important. It consists of 3 tests. First, a review of monthly payable reconciliation. Second, confirmation of balance. And third is investigating for unrecorded liabilities. I will be explaining about the 3 tests of details of balance. The first one is review of monthly payable reconciliation. Monthly payable reconciliation is a supplier statement that can be considered as a documentary evidence, but the authenticity of the document should be carefully relied upon since the document is obtained from the client. The reconciliation prepared by the client should be reviewed by auditors, and any unreconciled balance need to be investigated by them. The difference between the supplier statement and client records are mostly due to goods and cash in transit and disputed amounts. And the selection of accounts for testing should be based on the volume of transaction. This is to avoid understatement of account payable. Okay, the second test of details of balance is the confirmation of balance. In order to confirm the amount outstanding and payable to the suppliers, individual suppliers will receive a written confirmation. But this action of confirmation does not provide evidence of completeness, but it provides evidence as to the existing obligations and evaluations of account payables. It is recommended to use the confirmation when the volume of transaction is substantial and the planned detection risks are low. The creditor should specify the amount due from client, and any differences with client's record should be reconciled. The most important controls in preparing confirmation requests are we need to get a complete and accurate list of suppliers, and we also need to determine that the amount, name and address are accurate during the preparation of confirmation. And lastly, we need to ensure that the confirmation is sent to suppliers or creditors. The last test of details of balance, which is investigating for unrecorded liabilities. There are 3 procedures used to investigate unrecorded liabilities. The first one is to examine the subsequent periods for payment and purchase transaction. The second one is to perform analytical procedures on expense to determine any liabilities. And the third one is to examine any contractual agreements or commitments that raise the existence of liabilities not yet provided for in the accounts. Lastly, for disclosure, as an auditor, they are supposed to know the disclosure requirements on account, payables or borrowing or loan disclosures. Hence, the following procedures should be performed. First, review the list of account payables and determine its categories, such as amounts to or from related parties or loans. A separate disclosure should be made. And then, review any debit balances in the payable list. The debit balances should be classified into current asset. Lastly, review the minutes of meeting or any supporting documents such as contracts or agreement regarding the information on loans or payable. That's all from me, thank you.
So after all this explanation, we can see that purchases and accounts payable are the main accounts involved in when auditing the purchase cycle. Before auditing, auditors need to make sure that they understand the business functions of purchases and credit purchases in the client's company. Auditors also should determine any internal controls that are necessary to be implemented during assessing the control risk of the purchase cycle. Auditors also must determine the assertions and their related audit objective in order to detect any material misstatements in the purchase cycle. Auditors also must detect control risks and what substantive tests are needed. Since the main concern in auditing the payable account is the completeness of the records, so the auditors should search for any unrecorded liabilities through cut-off tests for purchases and payments made by the clients. A positive form of confirmation will indicate the accounts payable balances. That's all from us. Thank you.